As a price action traders, we use trend lines and trend channel lines to help us identify the market structure and to help us find high probability setups. According to price action rules, after trend line will break, prices most often than not will retest the new extreme. But what do we do when we see an overshoot of a trend line, something like this? This is what we're going to talk about in today's video. So the first thing we need to understand when we talk about overshoots is that overshoot is very unnatural activity in the market, because market geometry is a real thing. There is a rhyme and reason why market moves, and technical analysis works and patterns repeat over and over again. And when we see overshoot, this indicates to us that the market is very overbought. Now, I'm very hesitant to using this term overbought because a lot of people will now put RSI on the chart and stochastics and a lot of indicators. Trust me, you don't need this. The price action on the chart alone will tell you everything you need to know. You don't have to complicate your life. Just look at the chart and read the price action and you will see all the information that there is provided to you. When we see overshoot, we need to understand that overshoot most often than not will lead to break of a trend line and sometimes even straight up reversal. So you need to be extremely cautious when you see a setup bouncing off the trend line, which under the right circumstances would be a high probability setup, but because of the overshoot, it can be trapped. And don't worry guys, I've prepared tons of examples for you to really sink it in and for you to really understand how overshoots look and how to trade them. So we are at example number 1. This is a clear downtrend. We have a first swing right here, second swing right here that set the trend line up, and the third swing confirmed the trend line. There's no denying that this is a valid two-tier channel working lower. And this is a strong downtrend and we are working below EMA. But notice what happened. Strong steep move down. This is a strong oversold condition in the market. And notice how far away you're getting from the EMA. This is a good sign of overshoot as well, because as you know, EMA pulls prices closer to it. It acts as a magnet. So when you see prices working away from the EMA for a long period of time, that's not long-term sustainable and price will snap back. Now, this is a strong steep overshoot and look what it led to. We have a break of this trend line and price didn't even attempt to make a new extreme. We straight up reversed. This is what happens when you have an overshoot. So when you have a bounce off trend line right here, you want to skip this anyway. You want to let this correction play out just to be safe. Example number 2. Strong downtrend, a lot of confirmations of this channel, really strong channel working lower, and there's a lot of high probability setup on its way down. And here we have an overshoot, 4 big bearish bar consecutive, last bearish attempt, and this is a depletion move and we're far away from EMA and prices broke the trend line eventually. Here we have a one more bounce off trend line. This is just a first entry, so we don't want to take this anyway, but you still want to be careful and you still don't want to take this trade because look, it's not too long from the prices actually ended up reversing and never looking back. So just because you have a little bit of a consolidation and it took some time, that don't mean that you want to take this setup. You just want to be careful, expect the break or possibly straight up reversal. Just let the bullish correction in this instance play out. Example number 3. Nice bearish downtrend confirmed. This one is a smaller one, but it all acts the same. This is a clearly downtrend and we have an overshoot right here. You're not that far away from EMA, but you're getting far away from EMA. Big bearish bars, and notice you have a first entry short, second entry short, two-legged pullback at the EMA and at the key entry point trend line. This trade still would have worked. I already checked it. 33.1975, 33.1775. This still would have worked for 8 tick scalper's profit, but it just few seconds later we ended up breaking the trend line. So because overshoot will a lot of times break the trend line, and we ended up making a new extreme in this instance, which is good. But this would not be an ideal trade because we have an overshoot. If the overshoot weren't here and we bounce much sooner off this lower downtrend, this would be a great high probability setup. Example number 4, a massive strong downtrend working lower. This overshoot happened on a much bigger picture, but it still applies the same. A lot of consecutive bearish bars, big bars, so far away from EMA, and look what it led to, eventually breaking the channel and going into the next day. And we have a setup of this downtrend. It still, once again, would have worked for a scalp, but look what it led to. This is a strong bullish trend right now from the oversold condition, and this is what overshoot will a lot of times do. So when you see overshoot, Trust me, you want to pay attention to this uptrend right now. Another example, price is working lower, clear downtrend below the EMA, and at the very end of the move, we have a big bearish bar, depletion candle, overshoot. We're getting far away from EMA, and lo and behold, it led to break of a trend line and ended up reversing, and we didn't even look back. Yeah, we ended up going in the opposite direction. Once again, overshoot right here. You can argue that we have a break of the trend line, which will a lot of times lead to making a new low. But this break happened in the overnight session, and a lot of times breaks in the overnight session will not count because the traders are still not trading the regular US hours. And because nothing is written in stone when it comes to trading, here we have an overshoot which took a little bit of time to break the trend line. Prices overshot the upper trend line right here. This is a strong bullish move up. We're far away from EMA. We pull back close to EMA. You still don't want to take this trade because you're expecting for prices to break the trend line. It didn't happen. This is one of those cases. 1 out of 10 times, we actually ended up working higher. Then we have a break and clear attempt to new high before the market consolidated. So this is just a little bit different situation, but still the rules apply the same. You want to be extra cautious when you see overshoot and when you're taking the setup off the trend line. Now here we have 7th example, nice uptrend. Prices are fitting nicely inside of this channel. We have a strong bullish move up, a little bit of overshoot, but then we have a confirmation of this overshoot. We're so far away from EMA. You're going to pull back. Market is very overbought, and what it led to, break of a trend line and second leg down. We ended up making a new high at the end of the day, but the shortened aspect broke the trend line. Classic overshoot. One more example, clear downtrend. It fits prices nicely. We have an overshoot at the bottom. We're getting away from the EMA. Big bearish bar depletion. Last bearish attempt. We're pulling back to EMA, and prices eventually broke the trend line, and they ended up creating a new extreme, which is good, but you always want to pay respect this uptrend which happened from the oversold condition. And here's my last example that I have prepared. Uptrend working higher, it fits nicely off the lows, prices traded up higher. We have an overshoot super far away from EMA, ended up breaking the trend line and then continuing to make a new extreme high. And what is the difference between an overshoot or a break of a trend line? Well, the break of a trend line is always in counter trend direction. Like this, we have an uptrend, and the break of a trend line happened in the bearish downtrend momentum. And when we see a break of a trend line, we are not starting to reverse trading yet. We wait for prices to attempt to make a new extreme according to trendline rules. And when we see overshoot, overshoot happens with the trend direction. We have a bullish uptrend, and suddenly we keep piling up, and eventually we overshoot the upper trend channel line with the trend. This is overbought condition. So this is the difference when it comes to overshoot and when it comes to regular break of a trend line. And to summarize this, the way we trade overshoots is if this overshoot is far enough from EMA, we can potentially pick the top or pick the bottom. But more importantly, when there is a high probability setup at the key entry point at the trend line, we should sit on our hands and let the correction play out unless the trend is really strong. But either way, it is better to sit on our hands than to get trapped. And since I keep talking about high probability setups, let's talk about the day's price action, because we started with an uptrend, we have an overshoot, and we have a trend down, as I already talked about. After that, we pushed strongly above the EMA, and here I was a little bit unsure because I had two conflicting beliefs right now. Because we have an overshoot and we are trading to the downside, so I was expecting break and a new low. But at the same time, you have a break of this uptrend, so you're expecting for prices to create a new extreme. But if this downtrend is strong, then price will stay below EMA and the EMA will hold prices and eventually create new extreme. But it didn't happen. We pushed strongly above the EMA, so this is the first indication that this bullish uptrend may resume. Now, we have a first entry long, second entry long right here. But right now, we are going sideways, EMA in the middle of those bars. This is a consolidation and you want to stay away from this because, you're still unsure whether we can ended up trading lower. You really don't know, so sitting on your hands is the best option right now. And we started making new highs and new highs. This was my first initial trend line. I had this tight little channel working higher, but we have a new high, another new high, and another new high right here. So once we had this confirmation, this is when I thought that this would be a spike and a channel, because this is a strong steep move up. This is a spike, and this is a nice geometrical formation, and a third swing confirmed. So this is a spike and a channel. And here we have our first trade of the day. And this is a tricky one because trader asked me today how you count second entries when you keep breaking the previous high and you make a new high. Does the count reset? And the answer is yes. If we have a new high right here, we have a first entry long, pull back, second entry long. But we make a new high right here, so we have to start counting over. First entry long, and we don't get a second entry because this high is higher now than this high. So pull back, first entry long, we don't get second entry. This high is higher than this high, so count starts over, pull back, first entry, and once again there is no second entry. Count starts over right here, new high, pull back, first entry long. Once again, only first entry. So this is technically just a first entry, but if you're advanced trader, this looks like a two-legged pullback to the trend line. You can see the two clear legs. Even if we ticked a few ticks higher above the previous high, if you're a beginner trader, don't worry about this. Don't listen to me. This is the first entry and you want to skip this. But if you're an experienced trader and you see the spike in the channel, because there's a confluence of two key entry points, EMA, trend line, you're trending above the EMA, and this is a nice big bullish bar. So this is an uptrend and there's a confluence and looks like a two-legged move. So this is a good trade for advanced trader. And prices ended up working higher. Here we have a first entry, legit first entry, but I think this is too aggressive to take. You really want to wait for some higher low at this point, which comes all the way up to here, which you don't want to go long into this double top. So I think it's best to sit on your hands. It can be aggressive because you got, once again, a confluence of two key entry points, and the more key entry points you have, the better, the stronger the signal is. But it is just a legitimate first entry. But I can see why an advanced trader would want to take a chance here. Prices are making higher highs. And here we have a strong mess, strong consolidation. This is where you want to really sit on your hands. You wouldn't have this resistance line yet. But you can see a lot of stims, multiple stims. We're going 1, 2, 3, 4, 5, 10 bars, 14 bars going sideways. You're not even close to the EMA yet. But you have a first entry long, second entry long, bouncing off the trend line, but you're away from EMA and you're going long directly in this resistance inside of this congestion. So you want to stay away from this congestion. You don't really want to take any trades. The best way to trade congestions is to fade the breakout. Oh, and take a look. We have a tiny little overshoot on a tiny little time frame. This is just two small bars and massive overshoot. But more importantly, we are in an uptrend, and if you have a failed break lower below the overshoot, you're expecting for price to create a new high of this spike and a channel now. And this is why it is a nice big bullish bar. And it ended up working, and then eventually we made a second leg to a new extreme of this previous downtrend. But when you zoom back, this is definitely starting to look like, you know, at least somewhat of an uptrend. There's the only bearish momentum was at the beginning of the day. From that point on, we were just working higher. So there's no surprise we bounce off here. And once we bounce off here and we have this two-legged move playing out, you want to think about probably resuming the trend. And you want to potentially look at this resistance. And here we have a reversal pattern. We have a push strongly above the EMA, first entry short, failure, pull back, second entry short, failure. Nice bullish bar, small little risk. EMA is holding prices nicely. I was ready to go long above this bar right here, but we didn't trigger higher. We ended up having a bearish bar, and then there was the entry. Nice entry, reversal pattern, failed second entry short, in an uptrend. You want to take this long. And then prices started to consolidate once again. A lot of stims. You're very close to this resistance, and you have a lower high setup right here, but you don't want to go long now into this resistance. You're very close. You're literally going exactly into this resistance. We broke higher, and most breakouts of trading ranges will fail. So we pulled back lower, but I don't think you want to take the short here because the overall bus is up. So you never know when you're going to, you know, push one tick higher and then reverse. And by the time you get a lower high setup and a failed second entry long, you're going short into this resistance that now may act as a support. So this is a mess, a lot of stims, a lot of small bars. So unfortunately, not too eventful, but there are a few setups on the way up here. I'm going to mark this trade because looking back, the two key entry points are really juicy. And just because it's first entry doesn't mean that, you know, the spike and the channel pattern is valid here. Other than that, If you take a short here, I can see why, but it would be fairly aggressive. So if you made it to this very end of the video, that means you're enjoying the content. So I would kindly ask you to hit the like button if you like it. If you don't like it, hit the dislike button, doesn't really matter. Subscribe to the channel if you haven't. And yeah, take care everybody, and I'm gonna see you in the next one. Bye.